Hey guys, it's Mark here from ETFtracker, and this is the ETFtracker show for the week ending the 10th of September. And in today's episode, it is all about Exchange Traded Fridays, our week in review. For those of you who might not be familiar, we also do a midweek episode called Interviews with Experts, where we talk to different ETF market participants. So this week we had StockSpot on. And in this week's episode, it's very interesting because of the latest data that's come out from the ASX, and we'll take a look at that, as well as some other kind of market announcements and news. So we'll check that out along with videos and some podcasts, and you've got all the links if you subscribe to the newsletter. So we'll jump straight into what is in the newsletter, so you can take a look at that. So if you are a subscriber, you get access to this at 7:30 a.m. every Friday morning. If you prefer to watch, then you are probably seeing this on YouTube. We've got a show there, and you can also listen to this on Spotify. And if you don't have Spotify, we are working on the Apple podcast. Takes a little bit more time to get that up and running. But there is also the ETFtracker.com.au page, and there's a podcast section there. So in this week's episode, it was interesting because, what's happened this week, we got the latest data out from the ASX, so the investment products team, and Martin Din, who's leading the data charge there, along with some of the others. We had Martin on the show a couple of weeks back, so check that one out. There's the latest data and statistics. We'll get into that. Now, if you've missed previous newsletters, you might not have known that Ausbiz have actually had an update to their application so that you can now track experts and certain categories. So if you're interested in ETFs or equities, you can do that. So there's a couple of links here with what we're looking at in the newsletter, and you can go directly to the experts page and follow me and follow others that are talking about ETFs and other parts of the market. So the other part is that in local news this week, the biggest piece was the market update, and we also crunched numbers for that. There's also the latest ETF securities fund that was listed. It's called SEMI. And if you couldn't guess what SEMI is, we'll tell you it's semiconductors, and that's a very interesting kind of space to be involved in, whether globally or here in Australia. So definitely want to look at there. There's also some articles from Morningstar that we'll take a look at. Globally, we saw some news on the Chinese crackdowns on equities and how that hasn't necessarily dampened spirits for Asian ETF investments. And we'll look more at Bitcoin ETFs, as there's always news on that in the global markets, as well as direct indexing, which is a way to customize portfolios that's happening overseas more and more, and we'll probably see that here. So the first article off the bat is this one from ETFtracker, yours truly. And this is the August 2021 update for the ETFtracker application. And we get this from the ASX. So around the 8th to the 10th or so of each month, we get the previous month's data. It's kind of like the ABS, where it's a little bit delayed, only a few days. So it's quite nice. It's actually more timely than the ABS, to be honest. So the latest data has come out, and the results were that for the ASX at least, so there's still Chi-X that has their numbers that come out in a few days' time. And once we've got that, we've got the combined market view. But at least for the ASX, last number that we saw there was under 120 billion. We are now over 122 billion. It's 122.7 or 8. And that means we're close to that $123 billion mark in terms of funds under management. That was driven by $3.5 billion of inflows, net inflows. So taking outflows and positive inflows, and the net effect of that is this net inflows of 3.5 billion. Now that was led by the listing of a new active ETF, MHHT. And so that is something that really helped prop the market up. I think $1 billion was listed from that one. And so even if you take that out, still over 2.5 billion of funds that went into the market for the month of August is still very positive, and it's even more so with a new fund that got listed. And so 2.2% is what the average across all of the different ETFs, what was their performance like? So overall, August was a pretty good month. There were some negative performers, but mostly positive. And we also take a look in this article here on the ETFtracker blog. So if you aren't subscribed, make sure that you do. You can head straight to the blog page from the ETFtracker home screen. And what we see here is a new version of the ETFtracker app. That's right, there is a latest update. So last year we had version 1, version 2 came out in June, and we've made some tweaks to that following even more feedback from people in the market. And so we start off with a landing page, as people can see here on the screen. The animation that's shown here is a user going through the dashboard. They are going through different parts of the menu, jumping straight to the ETF snapshots page. So now you can easily go direct to seeing what are some of the key metrics about an ETF. So we show that one first on this blog. Overall, we can see that there were 3 new ETFs that got listed. So there was SEMI from ETF Securities, as I mentioned, MHHT from Magellan, that's the big $1 billion listing, and then GCAP from VanEck. So that takes the total number to 240 that are on the ASX. That are on the ASX and Chi-X now. As far as I was aware, I don't think there was any new Chi-X listings. So we're around that 240 as we were 237 last time. And we see from the screen below this new snapshot page, new high level kind of view of what's happened in August. So we've got a bit of a description there. We can see what FUM growth has been, as well as the number of ETFs there. And we've got some KPIs, and we can see at a snapshot glance that the market returns, 1 month returns were 2.2%. That is up on the previous month because we've got a triangle next to it. So we figured, we should put that there to make it easier that you can just at a glance view what's going on. Net inflows, that was 3.5 billion, as we mentioned, and that is also up. So it's got the triangle, green triangle facing up. If it was a red triangle facing down, that means it's not, it's down on the previous month. So this is up. Total FUM has gone up on the previous month as well. There have been certain times though, like FUM seems to go up all the time, right? No, in March and even February last year, FUM went down. I think it was March and February, or it might have been March and April. But in any case, FUM does not always go up, but for the most part it has. Number of trades is at 479,000. So how many times are ETFs changing hands between buyers and sellers? That is up on the previous month and has been trending up, which is good. Distribution yield, which is calculated by looking at the previous 12 months of distributions and looking at the current price, that is down on the previous month. And the management expense ratio overall has slightly gone up. It was at 0.51% and many decimal points because there's quite a few ETFs, but now it's rounding up to 0.52. So who performed best and worst? This data that we've got from the ASX has shown that ATEC is the one that's done the best in terms of performance in the month of August. That was up 14%, followed by the ETF Securities Long Nasdaq Leveraged ETF. You've got to be careful with leveraged ETFs though. There's a lot of articles out there talking about how they're not something that you need to necessarily hold for a long-term kind of play just because it's leveraged up, but it's also leveraged to the downside if it doesn't go too well. So that's LNAS. Take a look at that. And then there's a robotics play from BetaShares RBTZ, done really well at 9.7%, followed by the pair of Indian ETF plays. So exposure to the Indian subcontinent. So that is NDIA and IIND. We also show what has not done well. And as you can imagine, if LNAS has done really well, if leverage is at one end of the spectrum, then the leverage going the other way is probably going to be the other end of the spectrum. And that's the case here because the short NASDAQ play lost nearly 13%, followed by BBUS. That's a bearish US play. And in terms of where the money went, so we've got a screen on the ETFtracker app, which is in the sizes area. So there's 6 categories that we look at for ETFs, thanks to the data that we get from Chi-X and the ASX. So that's performance, that's how well the price did. Size is how popular an ETF is. Is the FUM growing? Are net inflows positive? And so that's all about size. Transactions, we look at trades and transactional volume. Tradability, and that's to do with monthly liquidity as well as the spread of ETFs. And we'll talk more about that. And we have articles that are coming out to explain a bit more about that. Quality is all about the dividend yield, and costs, we track that with the management expense ratio. And we've got the ETF snapshots there. But in terms of size, the one that had the most for the month of August 2021 was the Magellan listing of MHHT. That was 1 billion, followed by VGS, VAS, usual suspects there, and HYGG, the Hyperion Global Growth ETF. What got traded the most, it was VAS, which is the Vanguard ASX 300 play, followed by NDQ, which is the NASDAQ listing, VGS, IOZ, and interestingly, ETHI was also up there. So ETHI, the ethical ETF from BetaShares. They've got a few other ones, but that's the global ethical one, ESG one. And then in this article, we also take a look at the new snapshots, the ETF snapshots. So a user can go directly to, from the ETFtracker menu, the ETF snapshots page. There's just one filter at the top of the page, and you can see all the ETF tickers come down. In this case, we're looking at ATEC because that performed really well. And what we can see is in the first tile, there's 6 tiles there, along with a description of the ETF, what benchmark it tracks, even some links back to the fund page. And a Google Finance page, because whilst the ASX pricing data is for the previous month, there might be price changes on the daily. And so a good source for that is Google Finance. And so we've done the hard yards and the homework for you by piecing it all together. So in just the one spot, you can go directly to that fund page or the Google Finance page. And so with the ASX data in this case, the cumulative returns have been positive. And so it was up 14% on the month of August. It lost nearly 5% the previous month. So it is a bit of a bounce back. Net inflows is what we see next, and that's flat for this particular ETF, but it has been strong in previous months. But just because net inflows might be looking the way that they are at this particular point in time, there might be other metrics there that still show that there's value in owning and continuing to own or even buying into this ETF. Transaction-wise, the latest number of trades for the month of August was just over 1,500 for this ETF. So that's been quite popular. Tradability of this ETF. So in this case, where we have liquidity and also the spread, we're showing the spread percentage of this one, and that has been trending downwards. So when the spread goes down, that means it's easier to trade, which is a good thing. Distribution yield has been up in the previous 2 months, so that's positive, and the management expense ratio has just been flat since inception. So this came out in March 2020 last year. And then we take a look at VGS, which is another ETF, which was interesting because it had a lot of flows into it. And so we can see that performance there has been going back to since we started tracking the data in 2017. And this ETF is older than that. Its net inflows have been positive. It's actually had the best 2 months of net inflows in the last 2 months. And it's an interesting ETF because VGS is actually held in a number of other ETFs. And so Vanguard has these ETF of ETFs, these all-inclusive ones, such as VDHG, for example, which will hold things like VAS and VGS and VAF. VAF's the fixed income play or financials, and then VAS is the Australian shares play, and VGS is more international, and all of these other, there's some that hold some of the ethical kind of plays there. But those baskets of ETFs, Vanguard has a couple of these where they will change the weighting, the asset allocation for these different ETFs, depending on what it is that you're looking for, diversified growth or diversified high growth, for example. So definitely one to take a look at. But VGS is something that has seen a lot of inflows, potentially because people are just buying directly VGS on its own, or they're buying it indirectly through other ETFs. So it's kind of like preferential shares if we were voting. Transactions, that's gone up. It had its most transactions, as many other ETFs did back in March last year, but it's nearly reached those levels with August. And its bid-ask spread, the spread percentage, as we mentioned before, seeing that go down, that's a good thing. And we're seeing that distribution yield has been trending down as well, though. That is something maybe you don't like, or maybe it's something you're not concerned about because you're in it for other factors. So we just present those factors on the page, and it is a low cost ETF. So as you can see, it's 0.18% in terms of its management fees compared to something like ATEC, which is 0.48%, but you hold these different types of ETFs for different purposes. So that's something to look at, and you can explore that all in the ETF Tracker apps. Okay. So the next one is Investor Daily. They had an article out on the ETF boom to drive the market cap to 200 billion. And this article, they go through some research from VanEck that shows the market cap for ETFs, and we've been saying this as well, is expected to reach 140 billion by the end of 2021. And that July was the biggest month of inflows on record for Aussie ETFs with 2.8 billion net inflows for that period. So as at the time of writing, it was 2.8 billion. So I guess they're not counting when Magellan's MGOC ETF listed. And that was, I don't know, like 15 billion or something like that, plus all the other ETFs. So 15 billion overall that listed in the month of November last year. But if you take that out, they're saying that 2.8 billion was the biggest month. Well, it's now 3.5, but I don't know if they will count the active Magellan ETF that listed as part of that. So we can run the numbers and see. But in any case, you know, $140 billion by the end of 2021. And we were just talking about at the end of last year, when are we going to get to over 100 billion? So to go from, you know, how long is it going to take to get there to, hey, we're nearly at halfway to 200 billion at the end of year one. That's pretty amazing. And it is kind of like that exponential curve. Like it takes a while to grow to a certain level, but to get to that next milestone is just quick because of the sheer size of the market. We had an interview with Mark Jokum from StockSpot, and we spoke about that kind of hockey stick exponential growth of the market. So that's definitely one worth looking at. Now, if we click on this article, so this is from Michael Carpathios from Investor Daily. They're writing this article. So there's a couple of numbers in there. Some of the things that they looked at was that VanEck had a research piece that was put out, and it showed that based on investment managers that they surveyed, said to be the largest of its kind for 2021. They had over 3,000 responses, and 96% of those respondents now use ETFs in their portfolio, whereas 67% said they would opt to increase their exposure. So that's pretty powerful. What a telling kind of story there on the power of ETFs. So definitely one worth looking at there. The next article is from Morningstar. This one is titled ETFs are Funds, Not Friends, and it's an editor's note from Emma Rappaport over there at Morningstar. So this article came out on Friday. It came out on the 3rd, and as you know, we film and we record these on Thursdays, so we missed out on getting this one for last week, so it makes it into this week. So it is the week in review with a little bit of leeway to see what we missed there. So in this article, it talks about, or it highlights that now, especially as the trend for thematic ETFs continues amongst investors, it's really important to look at what's going on here because as Emma highlights, when a new ETF is launched, because it satisfies the latest trend or fad, you've got to ask yourself if that thematic has already substantially played out. Now, this aligns with our belief, anyway, at ETFtracker, that it's important to look under the hood of any ETF, no matter the name or style or how fashionable it might be. Another piece that's interesting here is that they also highlight the ticker names article that we mentioned last week from Bloomberg, and how having a memorable ticker name like meme or robo or whatever it is, or hack, that's also a popular one, how that, even though you might have two ETFs that perform very similarly, they have the same kinds of holdings, they have the same kind of metrics, but the one with the more popular name usually performs better. It has more inflows. Sorry, it doesn't perform better, it performs the same, but it has more inflows. It's more popular with the crowd. And so if you take a look at this Morningstar article, it goes through those things, and it also presents a couple of other facts and figures there. So we'll just get rid of that pop-up. And so the first chart that they've got here looks at monthly net assets for thematic ETFs, and we can see how that's been growing on this almost exponential kind of curve, especially as things get more popular there. And it takes a look at fees and the 30-year returns of ETFs, and how the lowering of fees, how that can significantly change the level of returns that you get over the course of 30 years. So definitely something to take a look at. And so in this article, there's quite a few links to other areas. And as we mentioned, there's that article on the Bloomberg theme for thematic ETFs and the naming convention of ETFs. If you've got ETFs that have those popular kind of ticker names, then it's certainly something that could be more popular than another ETF that does the same thing. So it's worth looking at this article. If you're not subscribed already to Morningstar, if you don't look at their ETF research, I recommend that you do. There's a lot of great things in there. So if you go to Morningstar, they've got an ETF section here. Okay, so take a look at that one. And the other one is from the Australian. And so this one is about BetaShares, another big stalwart of the ETF markets here in Australia. We had Peter Harper from BetaShares on the show a couple of weeks back. And so he told us a bit more about their process and understanding the types of ETFs that they have and how that can help investors. Well, they celebrated a milestone in September because they crossed the $20 billion threshold. When we looked at the data for August, across all of the BetaShares ETFs, it had gotten to 19.5 billion. So within the first couple of weeks, within the first week of the data coming out for September that they track, they were able to show that they've grown to over $20 billion. So congratulations to them. It is indeed a very important milestone. So from this article in The Australian, you can see here, he's the founder, Alex VanEck from BetaShares, a year and a half after topping 10 billion. So it's only taken a year and a half. They've been around for a while. So 2009. So from 2009 to a year and a half ago, they had grown up to 10 billion in terms of funds under management. And now to get to double that within just a year and a half, it just shows that exponential kind of growth. So very interesting there. You know, it's important for us as well. We're growing our own small business here at ETFtracker. The parent company, if you didn't already know this, for ETFtracker is a company called New Era Analytics, and that's a consultancy that I run doing data analytics. And we just started in January, February this year. So the joys of going through the ups and downs of revenue and all the expenses that come with running your own business. So it's really interesting to see here with ETFs. And you can take the analogy of your own investments. You might not see those returns necessarily paying off, but if you just stay the course and stay in the market, amazing returns. I'm not saying that you're going to get to necessarily billions of dollars. And if you are listening to the show and you're looking to get into that billions of dollars, reach out because I can definitely help you. But you know, it's great to see this kind of just persistence pay off when it comes to, in this case, BetaShares investments in ETFs and what they've done to help the market. And so it talks a little bit about the potential listing of a crypto ETF and how that could change the market. And it talks a little bit about the crash of Feb in March 2020 and how new money's come into the market there. So check out this article at The Australian. And we've got, the image here. And so the other one was the ETF Securities. They have their regular weekly monitor. And if you didn't already know, we are listing that each week because it gives a more up-to-date snapshot than the data that we get from the ASX, Chi-X, etc. And so this is for the week ending the 3rd of September. And what they're saying here is in the highlights, Japanese funds, HJPN, IJP, and also Asia Technology, which is Asia as the ETF ticker, as well as domestic resources, MBR, QRE, and OZR, and some domestic small cap funds, VSO and ISO, led the market higher last week. There's also quite a few other things that they've got in there. So you can look at performance and fund inflows, and that's on a it's on a weekly basis that they have, a year-to-date basis, and the last 12 months. So definitely worth looking at tracking that data from ETF Securities. Now we'll jump to the global section. So this one, it starts off with 2 Bloomberg articles. The first one is on the Chinese crackdown. Discounts lure investors into emerging ETFs. And this article highlights how US ETFs focused on investing in China and Hong Kong, they saw $1 billion of inflows last week. So over here in Australia, it takes us a whole month to get to a couple of billion. Over there in the US, just a small segment of the market. Maybe not a small segment, I lie. I haven't seen how big Asian ETFs are as part of the whole kind of market there, but a segment getting to over $1 billion. It just highlights how big the US markets are in terms of ETFs. And so that's helped emerging markets ETFs over there. And this could be due to investors buying the dip as prices have gone down after the government crackdowns in China. But it could also be that there's better than expected macroeconomic data that's coming out from that part of the world. And so if you click on that article, Bloomberg, as I've mentioned before, if you don't have a subscription, they give you access to, I think, 2 or 3 articles free for the month. But after that, you need to get a subscription. So definitely worth looking into it, because there's a lot of great news from those guys there. So we can see here on the chart, there's weekly inflows, net flows to US listed emerging market stocks and bond ETFs. During the, market downturn last year, in March, April, May, etc., they saw outflows from those funds. So even as the market was recovering after March, and we saw that here, it's a bounce back in April, May, the emerging market stocks and bond ETFs had fallen in terms of outflows over there. So we can see the sea of red. But ever since then, it's been a sea of green. So every week, so this is a weekly kind of chart that's being shown here, except for some periods of outflows in August, so just last month, it's been positive. And so it's seeing definitely some interest there despite the government crackdowns on Chinese equities. So worth looking at that. There's a couple of other charts, and they do at the end of this some regional summaries which show the flow from the week, and that's equity flows, bond flows, as well as total assets for different regions across all of the global kind of regions. So they've got Americas, Asia Pac, and EMEA. And they also break it down for the Americas. So what is within the Americas, and where were the flows going to Asia Pacific and EMEA as well. Okay, so that is the first of the Bloomberg articles. The next one is a Bitcoin ETF is likely coming soon. Is it better to just buy Bitcoin? And so this article shows bull and bear cases for a Bitcoin ETF, with some interesting points raised as investors who want Bitcoin. It's easy enough for them to just open up an app and buy it. Coinbase, for example, or Binance, you can just open up an app and get access to Bitcoin. Do you really need a Bitcoin ETF? But that said, the article says that there is also pros. So the pros and cons, there's also pros to having a Bitcoin type ETF, because an ETF can open up the world of Bitcoin investing and exposure to that for institutions. And if that happens overseas, and if it happens here in Australia, that could see pension funds, and here we call it superannuation, buying into assets, ETFs that is, that provide exposure to Bitcoin directly, rather than what we've seen before, which is exposure to companies that have either blockchain work that they're doing, or not directly exposed to Bitcoin. So that is definitely interesting. So that's another Bloomberg article there. Yahoo Finance had an article which I thought was interesting to flag, because it talks about another semiconductors ETF, PSI. So great name for those that know what PSI is as part of semiconductors. So that's pretty interesting there. Semi was the ETF from ETF Securities got listed. So semiconductors, great name. So PSI is this one from Invesco. Is it a strong ETF right now? And it's this one from Yahoo Finance. It goes through a couple of facts and figures about that ETF there. And just because we had this one from ETF Securities, it is interesting that there's this other semiconductors play that's coming out. Or maybe it's purely shown to me because the Google bots and Yahoo Finance bots are seeing that we're looking at semi, and so it's flagging this. If you think your computer's listening, it probably is. So it talks about this being a smart beta ETF or smart beta, and those are simply ETFs that do not track. They're not market cap weighted as most other passive index following ETFs are. So smart beta, it'll do it based on factors. Those could be various kind of factors like quality or momentum or whatever it kind of is. weighting what is in that ETF in a different way. So it looks at semiconductor ETFs just like other semiconductor ETFs might, but it might weight it in a different way there. So that's certainly something worth looking at. It takes a look at costs and expenses, who the fund sponsor is, and what index it tracks, as well as sector exposure and top holdings. So take a look at that one there. And then there's this other one here from Morningstar, which is one that we added late. So this is from the Financial Times, actually. Sorry, not from Morningstar. It mentions Morningstar. And this is saying that Morningstar joins the race to provide direct indexing services. And direct indexing is something that's of interest. And basically what's happened is that Morningstar's purchased Moorgate benchmarks. And this marks a move to the world of direct indexing. And as explained in this article, the concept of direct indexing, direct investing, direct indexing, it allows investors to create bespoke portfolios of investment factors to things like other parameters like ESG, for example. So you might have a particular ETF that you like and you want to take certain holdings out of that. Or you might want to have a broad market ETF like NDQ, but with a tilt towards technology or companies of a certain size. But those factors, that tweaking of what's in the ETFs, that is now known as direct indexing. And it is done overseas, but usually for high net wealth individuals. So it's something that's not necessarily available to the everyday trader, but that is changing more and more as more companies come into the market here. So Eaton Vance, which is the biggest player there, that was acquired by Morgan Stanley, and then BlackRock, another stalwart of the markets, that acquired industry number 2, Aperio, which was just behind Eaton Vance in terms of this direct indexing work. And now Morningstar's purchased Moorgate benchmarks. So seeing this kind of stuff happen overseas, we're looking forward to seeing the innovation happen here in Australia. All right, let's get to the videos. And as we mentioned at the start, we look at AusBiz quite a lot. We go on AusBiz, and if you're listening to this of a Friday morning on the 10th of September, then later on today, you can see us on AusBiz at around 1:30, and we'll go through the ETF market highlights for the show. So the episodes that we saw this week relating to ETFs is this first one, which was Everything ETF, look under the hood and do your own research, DYOR. And in this case, it's ETF Securities' Kanish Chugh, and he talks about the ETF Securities ASX 300 Yield ETF, ZYAU, and its strong performance, which has been driven by the reopening trade and more. So there's a need to understand exposure. That's key, as well as looking under the hood. So what he says there, we definitely would repeat that message, and that's why we've got the various data sets and ways to analyze that at ETFtracker. AusBiz also had another one which was called Everything ETF, is sustainable investing becoming just plain investing? And in this episode, it's all about ESG with Alex Holmes from Beta Shares, and he chats about the subjectivity of ESG investing and what to look out for. Alex says to look for companies who are deriving earnings from sustainable and green investment revenues. And there's more that he talks about in the show. So check that one out. And then there's this other one from last week. So this one came out on Friday. But as I said before, we do this on Thursdays, so we definitely missed this one, but it makes it into the cut for this week. And this is what ASX reports taught credit investors. In this video, it's from eInvest. And so Brad over there at eInvest, he talks about, he highlights that they're seeing positivity in the Australian corporate balance sheets across multiple industries. So that's a good thing. And they also talk about what signals they are looking for from companies. So check that one out. And then the last video in the list for this week is from The Compound. And so if you haven't seen that, we've highlighted that quite a few times because that gives it gives you exposure and understanding what's happening mostly in the US markets. And I'm sure they'll mention Australia if there's something mentionable for the Australian markets here, or for the US markets about Australia, but for the most part, it has been particularly US focused. A lot of Bitcoin talk there, and I guess that's something that we're seeing everywhere. So in this one, we usually talk about, or we highlight the Compound and Friends show where they'll bring in guests from other companies. But this one, it is the other episode that they have during the week, which is called Animal Spirits, and it's up to episode 221. So this is episode 8 of the Exchange Traded Fridays show. So we've got a way to go before we get to episode 200 or even 100 or 50 or, 2 more weeks until we get 10. And I'm sure we'll celebrate then because it's been a lot of hard work to get here, but they've been doing so well throughout the pandemic last year and even before then recording these shows. And so in this one, the hosts, Michael Batnick and Ben Carlson, they talk about things like Ray Dalio's performance. And so Ray Dalio, famous investor, Bridgewater, etc. He's got a book called Principles, which I bought sitting on the bookshelf over there. It's great. But they talk about his kind of lack of performance of late, which has been interesting, but it could just be a down year, so who knows. A little bit of Bitcoin because that's always there in the news. And they also talk about one of the hosts, Ben Carlson, who's been stricken by COVID, and so he and his family have had to sequester themselves and just kind of isolate, and he's been hit by it a little bit more, so it's interesting there to see how he's coping. They also highlighted, which I thought was really interesting in this show, how it's interesting to see the talk about markets being in a bubble. And so I don't know if it was last week or the week before, they showed just how fast the markets over there in the US, I think it was the S&P 500, how fast it has been recently to double off of market lows. And it's been the fastest to double off market lows, just over a year it took to do that, than it has for any other previous kind of periods that took 2 years, 3 years, 5 years and more to regain their steam. This time it's doubled quite fast. And what they're saying is that they're hearing a lot of chatter and seeing news and articles talking about, the markets really are in a bubble right now. But if you think about it, maybe the other way to look at it is that this market has not had enough time to process, right? It's not had enough, investors haven't, the ones that are bearish, they haven't let this market kind of run. And because other markets, it's taken years for those markets to grow to the levels that they did. Just because this one's grown as fast as it has, it doesn't mean that we're running out of steam necessarily. It just means that maybe we need to think about how high this market can go. So if you're bearish and looking for a bull case, that's certainly something to think about. So we'll get to the podcasts. And this week, the first one that we highlight is from Phil Muscatello, who has a great weekly podcast. He's got two, actually. One is called Shares for Beginners, which is Australian focused. The other one is called Stocks for Beginners, which is US focused. In this one, for Shares for Beginners, he talks to a good friend of mine, Kenny Porcari. And in this one, it is the fourth of a 4-part series that they've filmed over the last couple of months. They've recorded, so podcast. This one is called Global Financial Crisis. So Kenny has done these 4-part series. The first one was a brief history of the NYSE, because Kenny worked on the New York Stock Exchange for 30 years, and so he's got a very unique perspective on the markets there. And so that was part one. That was 1980 to 1987 from when he first joined. Up until the Wall Street crash. And then from 1987 to 2000, that was the second episode. Then there was a bit of a gap. And I think it was last week or the week before, they recorded one on remembering 9/11. So if you didn't know, Wall Street and the New York Stock Exchange is located in downtown Manhattan, where the World Trade Center is, the World Trade Centers were, and now they've got One World Trade, which is a single tower and a memorial. And so given that it's, 9/11, the 20th anniversary of that was just recent. It's actually coming up. September 11th. So yeah, it is coming up. We're recording this on the 9th. But all the all of the memorials and the documentaries that are being shown about that, and as we pay respect to all of that, it was a really poignant kind of episode to listen to last week, and just how it affected the markets there from someone who's directly in it. And then in this fourth one, it jumps to another major thing that happened in the markets that we felt here. I was an accountant working for PwC at that stage, and had just, graduated from uni hearing about this thing called the global financial crisis. And so, yeah, Kenny talks about that in this 4-part series. So now that they're all out, you don't have to wait. You can just binge watch all of these. So definitely check out the podcast from Phil Muscatello, Shares for Beginners. The other one, which was another episode that came out last week on Friday and it missed the cutoff then, is from Let's Talk ETFs. And this episode, we see, this is from Seeking Alpha. They speak about ESG. And so they speak with Stephen Flagel. He's the CPO, Chief Product Officer at Contigo. And they talk with him to discuss how the ESG space is affecting exchange-traded funds. So definitely worth listening to there. And so the tweet of the week, this was interesting because we got a little bit interactive here. We don't do too much at ETFtracker on Twitter. We tend to focus on Instagram, a little bit on TikTok, a lot on LinkedIn, my personal LinkedIn. You can follow me, Mark Monfort, if you are interested, or you can follow ETFtracker. But for the tweet of the week, we saw something that came out last week from Nate Geraci. And so Nate had this tweet that said, "What's the best ETF ticker on the market right now? One pick, go." And so people responded to that, and our response was, and there was a lot of US ones. Hack is there, and I think there might be a US ETF named Hack as well. But I said that, look, coming from the land down under, we've got a lot of great names here in Australia for ETFs. Cloud, Clean, Espo for esports, that's a great one. But coming from the land down under, Australia, we've got to have AC/DC as the fave, that if we can only choose one, I wish I could choose more. And so I've got it here with a picture of, and it was actually an animated image, a GIF, showing AC/DC live on stage. So, and how that plays into the battery and lithium kind of ETF from ETF Securities. And so that is definitely a great name if you had to pick it on that. And then in the chart of the week, we look at the new ETF snapshots as we highlighted above. You can go to that in the ETFtracker app, and we use that in the latest ETFtracker update. And in this one, we look at AC/DC, which was from the tweet just there. And so you can pick from the drop down, you see the 6 different metrics that we think are important based on the data that is collected from the ASX and Chi-X. And we also collect other data to see what benchmarks are, what the description of the ETFs are, a lot of homework, a lot of work that's gone into this. And you can go from those snapshot pages, you can go directly there from the landing page of ETFtracker. You can go to the funds page, you can go to Google Finance to see what the latest prices are, and you can do more. And this week, in terms of further education, we thought we'd highlight from VanEck. They've got a investor center and a learning hub over there, and they talk about smart beta. And so that was mentioned in one of the articles above. So in this portal from VanEck, they have an area where investors can learn more about smart beta. Now, this is a commonly used term for some ETFs that are in the market. According to the website, smart beta is the term given to ETFs that track an index that differs from the traditional market cap approach of selecting shares. So we mentioned in the article above that you can do it on a non-market cap weighted way. And so that might be for bonds or other assets or shares. And so you can learn more about smart beta on this VanEck link. And rounding it out, you can access the ETFtracker apps. And so we went through and did a update for the main ETFtracker app. And so you can go directly to that here with this link. And as I click on that, this will take me to the ETFtracker page. Now, the app itself, all of these apps, they run on desktop. So we don't have mobile apps. You can't go to the Google Play or the iTunes store for this kind of stuff. Not yet anyway. We might look at doing something later on. This is more a labor of love rather than we put some money into this we put a little bit of money, but not enough to actually make a mobile app just yet. And I'm not an app developer, but if someone is and is interested in ETFs and wants to work together, feel free to reach out. And so the first link takes you to the ETFtracker page, and you can on your laptop, we're on an iMac here, you can maximize that screen and go full screen now and stay within the page. So that's something to look at there. And we've also got the holdings analysis tools. And we've mentioned this before, but we do it now for 6 different providers. So there's BetaShares, iShares, State Street. Those are the first ones. There's also ETF Securities, there's VanEck and Vanguard. And so those last 3 were a little bit harder to get the holdings data for, but on either a daily, either on a daily or a weekly basis, we are scraping the holdings data there. So you can look at holdings and you can do the comparison yourself, but you would have to download the ETFs the holdings from each of those ETFs, or you can subscribe to a service that has that. Morningstar has that, for example, and other ETF apps are out there that have that. So you can look at that, or you can look here at ETFtracker, and we've got different dashboards. So this is the BetaShares dashboard, there's iShares, State Street, and you can interact with that. You can search the holdings if you're looking for a particular exposure, or you can compare ETFs within each of those providers to see how similar they are. Something that we are working on is the ability to compare ETFs across providers. And so that's something that will be coming out a little bit later on. And then there's also the ETFtracker forum. So we're seeing more members sign up to that. And if you do, and you've got some questions, you want to see a portfolio and analyze that and see how ETFtracker would do that, we're actually coming out with a publication that will show what it is that you can use ETFtracker for if you're looking at a single or multiple ETFs. But until then, you can go to the forum and ask questions about ETFs that you might have, and either someone in the community or us at ETFtracker and myself will answer some of those questions, okay? And then if you want to listen or watch, we've got the various links to Spotify and YouTube, or you can go directly to the podcast page, and you're probably listening to this in one of those now. So definitely check it out. And so that's it. That wraps up the week of 10th of September. And so it's on Thursday right now. So it's just, sun's just starting to come down. So we might go for a walk, get a little bit of exercise. We're in Sydney, so hopefully we'll get the lockdowns lifting. We'll see how that goes. But if you're interested in ETFs, we hope this has been informative. If you're interested in learning more, you can check out the other videos and podcasts that we've got. Sign up at www.etftracker.com.au. You will get access to the Exchange Traded Fridays newsletter and more. You can check out the apps. You can check out the other resources. You can talk to us if you're interested. And so have a great week. We hope this has been a great one for you in terms of your investing, and we'll talk to you soon. We'll see you next Friday. See you guys. Bye.